Hey traders, welcome back to another edition of the Market Review. My name is Vasily, I'm your trading coach and professional forex trader. For today's weekly edition, I prepared for you the discussion about supply and demand zones. Reading your comments, I found out that many of you are very interested in this topic. And checking different websites in the internet, it is truly very hard to find decent information about supply and demand zones. So I decided to record the entire video for you about this concept. We will discuss the price action example of that, we will discuss the application of that, and I will show you how to properly identify the supply or demand zone. Please don't forget to like this video, please don't forget to subscribe to this YouTube channel. It motivates to record more videos for you. Let's start. Alright traders, to understand the concept of the supply and demand zones, we must remember that with technical analysis trading the price action, we always rely on structure. We rely on key levels, on a support and resistance, and we assume that in future the market will react to some key structure levels, and based on that structure levels we make our trading predictions. Here on the dollar yen we can see that we can easily identify some key levels, and by the reaction of the market on that key levels in the past, we may assume that in future we will expect the same kind of reaction to that structure levels. For example, to that structure, from that structure we will expect a bearish reaction. We will expect that once the price reaches that key level we will see the bearish reaction here, and once the price retests the key level right here we will see kind of the bullish reaction. Yes, this is the foundation of technical analysis. Yes, the structure, the key levels, and with that right now let's discuss the theoretical note. Hey traders, in my last market preview video I mentioned that for my premium members I have written the entire book, the ebook with my trading strategy, and I was so surprised that so many of you are interested in just this single ebook. So I decided to create a separate page on my website just with the ebook. There you can get the information about the content of the book, there you can look inside the book and see the content and how it is written. Please check that, it is vasilytrader.com/ebook, all the info is there. Let's continue. For the theoretical note, let's just discuss the example of the classic ranging market. Here the price is trading in kind of the trading range, yes, and we can see that here we have just the perfect example of the consolidating market, yes. And what can we say about this range over here? If we pay close attention to the details right here, you can see that the price here respects the equal highs. Yes, here we have very strong horizontal structural resistance, and you can see that the price here perfectly respects that structure. But if we analyze the lows here of the market, look, we have some structure right here. Yes, this bullish impulse started from that point over here and we saw a massive expansion. Then over here, the price just recently started to grow from some structure but higher. Yes, over here again we have the structure level, and again you can see that here the reaction started from the higher structure level, and finally the structure right here. So you can see that here on this example we have 4 structure support levels. Yes, they are lying on different price levels, but these all levels are very close to each other. And though many newbie traders treat all these levels separately, they treat each and every level separately, and they expect the bearish reaction from that structure, bullish reaction, sorry, from that structure, that structure, that structure, that structure, and they are trying to treat all the structure levels. In practice, based on my experience, I found out that such kind of approach doesn't work. The best way to treat the structure levels right here is to unite them in the zone. Yes, so here we have quite wide zone of support, and that zone over here we will call the demand zone. Why we will call that the demand zone? Because once the price enters that demand zone, some aggressive buyers will start buying from here, from the upper boundary of that demand zone. But if the price goes lower, then more buyers will join. Yes, based on that lower structure level, some other buyers will start buying then from here, and then the most conservative traders will start buying. So as you can see, as the market dives into this huge zone of demand, more and more buyers started to buy. The demand increases within that zone, and that is why we call that the zone of demand. Yes, it is the area, the structure area, where we unite many different key levels. And now let's analyze some market examples so I could explain you better the concept of supply and demand zones. So in our theoretical node, we had the resistance, the horizontal resistance, and we had the demand zone. Over here on euro dollar, we have the perfect example of just the horizontal levels. Yes, over here, if we just analyze the recent price fluctuations, you can see that over here we have very strong horizontal structural resistance. Yes, we can easily identify that it is just one single strong structural resistance. And over here we have very strong horizontal structure support. Again, it is just one single level. Yes, the price just respects one single level and starts growing from that. And here we have just one single level from where the price started to fall. So here it was quite easy for us to identify the key levels. But I have another example for you where we need to know this concept of supply and demand zones. Here we have pound cat pair daily chart, and here let's just follow the price action of the market to identify the key levels. As you can see on a daily, the pair is kind of ranging. We are trading here in a major trading range, and as you can see, for a quite long period of time, though we see quite strong swings over here, the market doesn't have any trend. Yes, it is just trading in a sideways. So what do we have over here? Let's try to identify the key levels. First of all, let's start with the supports. Yes, I guess the major bullish impulse started right here, and based on that we can draw the horizontal line, and here is just one single structure level. Yes, and we can easily identify that structure support right here. Here it lies. How about the next support? Over here we see quite nice price fluctuations, and let's start drawing the horizontal levels based on that. We have the horizontal level over here, over here, over here, and also some price fluctuations over here. So here we have the perfect example of the demand zone. Why we call that the demand zone? Because you can see that in the past the price respected different levels within that area. Yes, and if in future the price drops to the demand zone, we cannot predict which level exactly the price will respect and from which level exactly the price will start growing. So we unite all these levels in this demand zone. Yes, and bullish continuation will be expected from the entire zone. Bullish continuation can start, bullish reaction may start from the upper boundary of the demand zone. It can start somewhere in the middle or from the lower boundary. Yes, it helps us to more accurately feel the price, and it helps us to more accurately make our predictions. How about the supply zones over here? Let's again follow the price action and try to identify where the price started to fall when it reached some resistances. Over here you can see that we have very strong structural resistance. Yes, just below that we have some other structural resistance over here based on that structure. Then over here, as you can see, again we have very perfect example of the supply zone. Why we call that the supply zone? Because in the past market participants respected different levels within that area. We didn't know exactly which structure level will be respected in future. As you can see right now, we are very close to this major supply zone, and the price can start falling from the lower boundary of that, but the price also can start falling from the upper boundary of that. We consider the entire area, the entire zone, and we look for the bearish movement from the entire area right here. And to catch the bearish move from that, yes, we let the market reach that zone. We let the market trade within that, and we are looking for the reaction of the market inside the zone. Yes, we are looking for the intraday price action. We check lower time frame, and there we check how the price acts, and we are looking for the reversal formations there to confirm the initiation of the bearish or bullish wave. Yes, so that is how we apply the supply and demand zones in practice. Alright guys, that's it, and now I hope that you better understand the concept of the supply and demand zones. Now it's your task to practice that. Take different financial markets, take different charts, and try to identify the supply and demand zones. Then look how the market reacts to them. Look how the market acts within the supply and demand zones. And you will be surprised how the accuracy of your predictions, how the performance of your trading strategy will increase once you will properly identify the zones of supply and demand. Thank you so much for watching. Don't forget to check my ebook and also like this video and subscribe to my YouTube channel. I will see you next week. Thank you so much, guys.